20th, stocks continue to experience extreme selling pressure. The NASDAQ index is now officially in bear market territory, and we are experiencing the worst December for the Dow since 1931. Investors are fretting over the Federal Reserve's moves to raise interest rates, projecting 2 more next year, and a possible government shutdown looming. But what I tell you guys, though, is that we're reaching a point that we would consider capitulation, that necessary level that investors have to get to of all-out panic, throwing in the towel before a rebound can ensue. I want to show you in a moment some projections that I have for the stock market, but I want to tell you that in our client portfolios at Legacy Wealth Partners, we've been significantly reducing stock exposure over the last several months. Most of our clients today have about 50% or so of what they had at the end of September. So now is not the time to start thinking about getting defensive. That time has already passed. Let's take a look at what the charts are showing us might happen in the near future. I want to show you a chart here that I posted on Twitter earlier this week. This is the S&P 500, and I show where the market peaked out in late September around 29.27. We pulled back from there, but then successfully rallied back to this level of 28.10 and actually hit that again, but failed to succeed at moving above that resistance. When the market pulled back below this valley here between these two peaks at 26.33 and broke below that a few weeks ago, that created a technical pattern known as a double top. And from that, I projected a possible downside range bottoming out around 24.50. We actually dropped just below that level today and then closed between these two lines at 24.67. Right now, if the market's able to hold this level and bounce off of that, that could represent a near-term support, and we could see a rally from there. If not, the next level I'm looking at for the market to hit possibly is 23.77. That's about 4% lower than we are right now and represents about an 18% decline from the peak. But to sum it up, we have an extreme level of volatility. This is a very unnerving and anxiety-producing environment, which I completely understand. But it's important to keep in mind that it's really critical to, number one, always remain diversified in your portfolio and not take on any more risk than you can afford to absorb financially or emotionally. And the second thing is to make sure that your decisions in your portfolio are made based on disciplined, evidence-based data and not based on emotion. Continue to watch us. We'll keep moving in the right direction. Thank you for taking the time to listen to me again today.